All right, a quick recap. We can see here gold is broken out of this long 6-year consolidation. Um, I, I see a lot of people, wanting to call the top, taking profits too early. Um, this is a different kind of market than what we've had the last 6 years, and don't expect it to behave the same as it did during this consolidation phase. I'm pretty sure this is a valid breakout, and I don't think gold is coming back below this zone anytime soon. Maybe not for years. Um, that being said, I'm seeing a lot of analysts coming up with all kinds of nonsense reasons for why gold is going up. Geopolitical turmoil, the tension in the Middle East, all the same stuff that's been going on for the last, off and on for the last 10 years. But none of that really had any effect on gold. Uh, so that that's not what is driving gold. Let me show you what is. All right, this is the dollar, and this is what is driving the gold market. This is a rally out of a 3-year cycle low. You can see at this point right here, back in January, the dollar started to crawl along the 200-day moving average. Just multiple hits of this average. And I've been saying all along the ECB is going to try and suppress the euro and prop the dollar up. They want to, countries are going to try and offset disadvantaged trade deals with Trump by suppressing their currencies, trying to control the currency crosses. So, every one of these, the ECB is using this 200-day as support to push the dollar back up, push the euro down. And the problem is it's happening over and over. The dollar keeps coming back down. And this is a very bearish pattern. When price starts to crawl along a moving average or a trend line like this, it's a sign of weakness. And typically what happens is when the support breaks, it breaks very violently. Gold is anticipating that the ECB is not going to be able to keep the dollar propped up. And we've, I noted this the other day. We had a very short daily cycle. The ECB came in again, tried to prop the dollar up, could not get it to stick, could not get it back above these old highs. On the FOMC statement, the dollar collapsed again, and now it is threatening to break through that 200. And I think with this pattern, this crawling pattern in play, when this does break, we're going to get a very sharp, very violent move lower. And then let me widen this chart out. You can see here where this is the 200-day moving average. Now let me turn it to the weekly. All right, here's the weekly chart, and you can already see, the dollar has got problems. So if you've been listening to, these dollar bulls like Martin Armstrong and many of the analysts over at KE Report, and there's just lots of people that have been dollar bullish, and these people they're just flat out wrong. They've been wrong since the top in 2017. This was a big warning sign right here when the dollar broke through the 200-week moving average as it came down into this 3-year cycle low. And the rally out of the 3-year cycle low, I think the only reason this has even been able to hold above it at all is because the ECB is trying to suppress the euro. You can see already the 200-week moving average is flattening out, and we've got a megaphone topping pattern in play here. This rally has been truncated, not even close to coming up to the this upper trend line. So I'm going to tell you that the dollar bulls, they've been wrong for 2.5 years. They're going to continue to be wrong, and the dollar is going to break down. It's going to break down violently. It's going to drop back below this 200-week moving average, and it's going to confirm that the dollar started a secular bear market back here in 2017. And the only thing that's been propping this pig up is, the threat of more rate hikes, which is now off the table. And actually, the odds are starting to increase dramatically for rate cuts, and the fact that the ECB and the Bank of Japan are trying to suppress their currencies against the dollar. It's the only thing that has moved the dollar up even this far, and it's not going to work anymore. All the currency interventions are going to fail catastrophically, and this is what is pushing gold higher. Gold is starting to anticipate a collapse in the dollar and a return of a secular bear market. And these bear markets tend to last 8 years. So I'm going to say, I noted in my previous video that we had started the second phase of the gold bull market. The first phase started, back here in 2015 with the baby bull, and then we had that long basing pattern. We're now breaking out of that basing pattern, and we're doing it as this 3-year cycle in the dollar is topping and rolling over, and it's getting ready to confirm that we started a secular bear market right here. So this is what is driving gold, not some kind of nonsense geopolitical risk. I mean, seriously, how in the world could the dollar be dropping and dropping hard with all of this tension in the Mideast and geopolitical crisis unfolding? I mean, there's just no way the dollar should be dropping in that kind of a environment, but it is, and that's telling you that the dollar is in a secular bull market, and it's getting ready to roll over. And what I've been saying for years is we're about to have inflation, not deflation.